So where do you see the markets going right now? We're out of the bear market, technically?
Yeah, it's a good question. So technically, yes. As of 2 days ago, there are different definitions of what a bull market is, but our technical definition of a bull market is when you re-achieve and then surpass a prior record peak, the prior record peak from the previous bull market, which is what happened 2 days ago. So this is a very fast bear market. Started on February 19th, ended I believe March 23rd, and since March 23rd of this year, we have, in hindsight, we know that we have been in a bull market. All right, it was suspected up until now, but now it is confirmed. This was a bull market and will go down in history as such. Now, the question is, where does it go from here, right? So, I know the market was down slightly earlier today, but one day means nothing, quite frankly. And actually, if I check right now,
it's up at the moment across the board.
Yeah, it's up at the moment, right? Slightly, right? So we're still not back at the peak it achieved 2 days ago. But here's the point I want to make. If you look at history and you look at the history of bull markets following a bear market, right? Because if you think by traditional definition, you basically have it just alternates: bull, bear, bull, bear, bull, bear. We look at it a little bit differently, but let's just keep it simple for now, right? After you have a bear market and then the prior record peak is re-achieved, historically, the shortest time before another bear market started was 4.5 months, right? The longest time before a new bear market started was over 10 years, right? And the average, and this is since 1950 for the S&P 500 I'm talking, and that's where these averages come from. The average was an additional 3.5 years, right, from that, new record peak achievement, right? So if you look at it from that perspective, if we were to head back into a bear market, over the next 4.5 months, it will be the first time it's ever happened in history. So it's unlikely. The 10-year time frame is probably also unlikely. Beating that, and going out further. It'll probably be somewhere in between if you're using history, as your judge. So I mean, that doesn't mean, when I say bear market, remember the bear market's defined as a 20% decline from a peak, right? So it doesn't mean we can't get a pullback, right? It doesn't mean we won't get a pullback. In fact, we probably will. There's actually never been a time period in history between two bear markets where you didn't get a pullback of at least 10% or more, right, before going on to get new record prices. So that's one perspective, right? So basically, if you look at it from that perspective, what I'm saying is, I think we got plenty of room to run, for this bull market, right? Whether there's a pullback in the short term or not, a correction in the short term or not, is up to anybody, to say. But even from that perspective, from a data perspective, following a bear market or a 10% plus correction, on average, it takes about at least a year and a half. When I say at least, on average, it's been at least a year and a half before you get even a 10% plus correction. Right now, it's only been 6 months, right? So either one of those, historically, either a 10% plus correction or a bear market is unlikely in the short term, right? You're looking at about a year out before it starts to become, from here, before it starts to become more likely that will occur. So do we get a 5% correction? Do we get something less than 10%? That's more probable. I think that's a more probable scenario.
What about the election? How badly do you think that'll impact the market?
Political, how badly, it's anybody's guess, but political outcomes tend to be priced into the market in advance of them actually happening, right? Leading up to the election, right? So unless you get a big surprise, right? And I think an example of a pretty significant surprise was the last presidential election, right? I think nobody really expected Trump to win necessarily, but he did, right? And at first, if you remember what happened then, overnight the market dropped like 5%, over in the futures markets. But by the time the market opened, the market was up that day, right? And then it went on a rocket ship rally for a good year or so, before going into a little mini bear market at the end of 2018. So probably related to the trade war, right? And now we have this coronavirus issue, related bear market. Right?
Should we be concerned before the election?
I think no. To be honest with you, I think regardless of what the outcome is, whether it's a Biden or a Trump election, I don't think it should affect your investment decision making. Should you be concerned from a political standpoint? Yeah, that's a different question. I mean, that's up to you.
That is,
right. But from an investment analytics and a data analytics standpoint, I don't think it should be a concern. And that's a conversation we've had with a lot of clients lately. I think that's actually one of the number one concerns that people have had is the election outcome. For us, effectively it's irrelevant, in terms of the way we make our decisions, and the way we manage client portfolios. So, and part of that is because the way we manage portfolios, which is different from the way some others, we do everything algorithmically. Everything is by data analytics. It's all by pre-prescribed, formulaic decision making, which is different from having a group of people sitting around a table and trying to predict the future. Basically, we do it a little bit differently. So for us, by taking the emotion and the guesswork out of the equation by using the algorithms, that's it's an easier for us. It's easier. It's an easier approach. It's a cheaper approach. It's a more effective approach, and it's more effective because it takes the emotional decision making out of the equation. And if we can describe that to clients and make them understand that, that also puts them more at ease. It doesn't hurt that or mostly borne themselves out and proven themselves through some pretty nasty stuff in the last couple of years. So that also helps. But yeah, I don't think the election is something we need to concern about. With regards to investment portfolios, outside of investment portfolios, with how that affects the real economy and how that affects politics and freedoms and all that, whole other question. But for me, it's not something I'm concerned about.
Jesse, Biden's talking about raising corporate taxes. So wouldn't raising corporate taxes hurt profits, hurt valuations?
Most likely, yeah. Most likely would.
So do you think the market, like you said, the market is already priced in? Do you think it's valued now, or do you think it's priced in for a Trump victory?
I don't think it's priced for either yet necessarily.
Mm-hmm.
I think it's too far away to say at this point. But by the time the election results come, then it will be largely priced in. Right, as we get closer, as more information becomes available, as information becomes available on the market, it gets quickly priced into the valuations.
Right. So
and by the time
now is the market doesn't really care right now.
Not saying it doesn't care; it definitely cares, but I don't think it knows. So it doesn't know, so it's not placing. It's not one of the major factors in the price of the market at this point. But talking about valuations, yeah, okay, so I talked about history and historical data and that kind of thing. Another way we look at the markets is by using probabilistic analysis, right? And by looking at different segments of the market, different asset classes, and determining how over or undervalued they are relative to their own history and relative to other assets, right? And if we look at that, there's been a lot of fluctuation in that lately, obviously with the gyrations of the markets over the last 2 years, really. But right now, it so happens that the only thing that looks heavily overpriced is U.S. growth and tech stocks, U.S. large cap growth and tech stocks, right? They're about 2 standard deviations above their expected long-term returns, or historical long-term returns, which means that about 97.5% of the time historically, their returns have been worse than they've been over the last year, right? So, I mean, that's if you look at probabilistic analysis, that means they're much more likely to go down from here than they are likely to go up, right? But if you look at other types of assets, both stocks and bonds, they're much closer to fair valuation. They're much closer to the zero mark. Not heavily overvalued, not heavily undervalued. There's not a lot that's undervalued out there, except for U.S. mid-cap and small-cap stocks and emerging markets bonds. So as a result of that, I mean, you can see that makes sense if you think about it, because the U.S. mid-caps and small-caps, those are small businesses. Those are small to mid-sized businesses in the United States who have been disproportionately hurt based on the coronavirus, right, and have been much slower to recover. Right, so as a result, I think there's still a lot of value in those companies. So in the opportunistic strategies that we offer, we've been deploying assets into those spaces, in particular into the small cap and mid cap spaces, because we think there's still a lot of value there relative to other areas of the market, especially large caps, which are up there.
Right, makes sense, Jesse. Yeah, thank you.
Yeah, my pleasure. So yeah, I mean, overall, given the outcome of those two types of analysis, I think we're pretty much neutral on the market from here, right? I don't think there's a lot of reason to believe there's a lot of downside from here. I don't think a lot of we're going into a really rapid rise, anything like that. We're relatively neutral, because I think there's probably room for a minor pullback in the short to intermediate term, but in the intermediate to long term, I think we've still got lots of room to run in a bull market, based on history. So generally speaking, yeah, we're pretty neutral to, I'd say, maybe slightly optimistic. If that makes sense.
Okay, yeah.
Yeah.